What's your take on Palantir and Asana choosing the direct listing route?
These are two really interesting companies, and they're taking a route that really is not that well tried and true. Investors that participated in the two prior direct listings, which were Spotify and Slack, really did not see in the months after those direct listings, basically they saw lackluster returns. And those start to make an imprint on your mind when you're looking at these new ones. So the track record has not been very good so far. It would be nice if it were better, and we'll see whether these companies can do a better job of it. But the structure itself is kind of works for companies, but doesn't work so well for investors. The companies, for example, they're seeking the highest price possible. That's fine. And for them, and seeking to be able to sell shares anytime they want without a lockup, which typically you'd have a lockup that would be enforced while the company at least showed a couple of quarters of demonstrated results before those shares were released. So when you don't have that, it's good for the company, but for investors, it's not necessarily a great deal.
Interesting. Last week, I asked Todd McKinnon, the CEO of Okta, a similar question. They went public 3 years ago, did have a lot of momentum coming out of the gate, and still have momentum to this day. Take a listen to what he told me.
There's a reason why hundreds and hundreds of companies have gone public a certain way. And you have to think really hard about trying to innovate around your IPO. You need to just get through it, get a fair price, get a good, stable group of investors, get a stable stock price as much as possible, get your employees comfortable as much as possible, and move on and get back to the business of building your company. I think that's one thing that gets lost in all of this.
So, Kathleen, he's sort of saying, like, why reinvent the wheel, which sounds similar to what you're saying. I mean, why go this route at all?
I definitely agree with his comments here. What I'd like to see is a lot more attention on how to make better our existing IPO process. Because, certainly you don't want to see so much money left on the table. There have to be other ways to do it within the existing process. And I would like to see a lot more. We're finding that the regular way IPO process is really a quick one. The information flow it's a very short. It's being restricted. I think we can get more information flow. I mean, one question I have is why in a direct listing am I seeing the forecast for the company, but I'm not seeing it in a regular way IPO? I mean, I think we need to look at our regular way IPO process and improve that, because there's a lot of very good things for investors in it. So we need to take a look at that. But I think, experimentation, why not? Let's see how it goes. It's really the companies are willing to take this move, and I'm wishing them the best in it. I just know that what's happened before has not really been the best result.
So when it comes to Airbnb, for example, which could be the biggest listing of the year, they're still deciding, as we understand it, the actual route to the public markets, whether it's an IPO, whether it's a direct listing. How would you advise them?
Well, I certainly think that my advice is Airbnb should certainly take the regular approach to going public. Now, all along, it's kind of interesting because we heard Airbnb was going to do a direct listing way back when. There was rumor that Airbnb would be willing to be bought out by a SPAC. And I haven't heard any of those two things happening. I just have heard they've filed confidentially. And it looks like, I think they're going to tap the regular IPO market. The results are best by doing it that way in terms of the long-term price and shareholder base for the companies. Now, we're all going to look, Airbnb is going to be a very exciting company to look at. And the challenge there is going to be, the travel industry has been hit by COVID, and, how to project going forward, how to put the right valuation. The prior $30 billion private valuation is just not going to hold up under current circumstances. But it'll be a very interesting IPO, and I do hope they do it the normal way. I mean, if you look at
the cybersecurity firm McAfee Kathleen, the cybersecurity firm McAfee also just filed for an IPO today. You were saying about going the normal route.
Yes, I just wanted to point out that, you know, we constructed IPO indexes that track the returns of companies that have gone public over the last couple of years. And we have an ETF that tracks that, and the performance of these regular way IPOs, once they start trading, has been very strong, much better than these other methods of going public, including the SPAC method. So I think that the regular way IPO has a lot to offer. On McAfee, that's an exciting one. We think it'll be a couple $2 billion deal. It's not the high growth company. This is a restructuring play, but a profitable company with moderate growth, but a good position in its industry. I think it'll do a successful IPO. And boy, there are others. There's so many others that are in the backlog that are going to tap the market. The IPO activity that we've seen this quarter is as much as anything we've seen since the dreaded internet bubble. So there's an awful lot of activity. Yes, it is a little bit frothy, but deals can get done. This is a good time if you're a private company to tap the IPO market.